Today's the day. 30 minutes until the start of cash trading on this election day. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
And coming up today is the day. Election day is finally here. Harris and Trump end one of the most dramatic presidential campaigns in history. It's now down to the voter to decide the winners.
From key market signals to key races to watch, we've got team coverage for you from around the country, as well as reaction from Wall Street and the C-suite.
Plus, Boeing finally reaches a deal with its union workers, ending a strike that's crippled production for almost 2 months. Some needed good news for Boeing. We'll get to all of that and more, but let's take a look at where markets are trading, of course, as we count down to when polls close. You can see the setup right now, it's pretty tepid. The S&P 500 up about 0.1%. The NASDAQ 100, your big tech names, up a little bit more. It's hard to make too much out of these moves, of course, as we await for some clarity here. Hopefully, we'll get it in the next 24 hours or so. You take your look at the bond market right now. A wild day yesterday, a big rally, and now coming back up a little bit. You can see 10-year yields currently higher by about 4 basis points, Matt.
All right, so equity index is still near all-time highs. We've done pretty well after the past couple of presidential elections as well. I've got a chart here that shows the results in equity indexes 1 day, 1 week, 1 month, 1 quarter, and 1 year after. You can see, though, that 2016, for some reason here in yellow, I would have put it in red, 2020 in white, I would have said blue, but 2020 was a better year, or the year following the election, for the equity markets than the year following the 2016 election. The same is true, that was the S&P. The same is true for the NASDAQ, as well as for the Russell 2000. So regardless of where you look, we had a better year following the 2020 election than we did following the 2016 election.
Optimism all around, Matthew. That's what we depend on you for. We're going to look at some stocks to watch under the surface. Optimism in Boeing, of course, as Katie was talking about, 1.7% higher. Workers voted to accept a new labor contract, ending a strike that crippled the jetliner's production. Of course, Boeing's still down on the year pretty significantly, but a good day for them indeed. Palantir just soaring more than 16.5%, climbing after reporting record profit on strong demand for AI products. Palantir has already been up 141% this year, so adding to those gains in a big way. Ferrari, though, down 5.7%, lower after shipments of luxury cars declined in the third quarter, Matt.
All right, and of course, there's a lot to talk about other than the election.
Well, it's your birthday.
No, it is my
one.
birthday, and really, we wouldn't have had anything to talk about other than the election.
True.
But Boeing workers came back from strike yesterday.
They
You
did.
must be so excited.
I'm sure that Kelly Ortberg is pretty excited here, too. Maybe the Biden administration. We know that, of course, Julie Su has been involved in those talks. Let's talk about the election, though.
Okay.
I mean, we've been drumbeating for months and months. We're finally here. And it was Cameron Dawson, actually. She made a good point on surveillance earlier that you think about how close polls are, 50-50. Any surprise, any outcome is going to be a little bit of a shock.
And with the economy being such a hot topic on people's radars, we have to remember that in those swing states, the economic realities are different on the ground. You know, guys, in Nevada and Michigan, the jobless rate is actually higher than the national average. So it will be interesting to see who comes out to the polls, who they vote for with those realities in mind.
Yeah, absolutely. Let's continue to focus on this election coverage, shall we?
Yeah.
I mean, why not? What else are we going to talk about today,
we could talk
right?
about earnings. We could talk about the Fed. We're going to get to all of that. But we have reporters stationed across the country right now from all the swing states, from both campaign headquarters. Let's get to it now with Bloomberg's Skylar Woodhouse. She's been following the Harris campaign in Washington. We also have Felipe Marques with the Trump campaign in Florida. Skylar, we're going to start with you on the Harris campaign. Of course, you've been following it closely over the past couple months, and she's only been in the race since July. Talk to us about the culmination and how Kamala Harris and her team will be spending the last few hours here.
So Vice President Kamala Harris, she is hunkered down here in Washington. She got back to D.C. early in the morning after her final rally in Philadelphia. She was barnstorming Pennsylvania all day yesterday to try and shore up those final votes in the must-win battleground for the return to the White House. And she is here in D.C. today. She will be hosting her election night festivities at Howard University. And, I think the campaign, like you just said, they haven't had a ton of time with specifically Harris. Now, they were on board for Biden, but since Harris has taken over, they've really had to hit the ground running from, mobilizing voters to learn who Vice President Kamala Harris is as she stands as her own candidate. And so, that will all come together tonight. As polls close, we'll see where the results come in. But, I think that the campaign is feeling the momentum. We've heard from top Harris advisors who have said, that they are pretty confident that they'll get the win. Some even saying that Harris could potentially win all 7 swing states. Now that's wishful thinking, but we will see how the results turn out. I just want to highlight here the Des Moines, Iowa poll from over the weekend shows Harris up 3 percentage points. And even on some other national polls, former President Donald Trump is losing the edge he did have in the earlier marks of the campaign. So the Harris campaign is definitely seeing things maybe looking positive, but they have been striking a balance of continuing to say we are the underdogs and knowing that it's still going to be a tough battle.
Felipe, let's bring you in here as well. What is the tone on the ground at the Trump campaign?
Well, first of all, as you can see, I have this very dreary background in front of me. No palm trees, nothing that would suggest that I'm in Palm Beach. But it's because we can't be at the convention center right now. It's getting ready for tonight's big party. It's striking the difference between what Skylar just described, right? Like, I spent the night talking to a couple of Republican operatives, and they are sure that Donald Trump's going to win. They say that early voting data points out that he has a large margin for victory. They're very optimistic. They were very energized by Joe Rogan's endorsement last night. They think the Iowa poll was a fluke. So obviously they are very, very optimistic with their chances. There's still one very important thing left for Donald Trump to do today, which is cast his own ballot. He's expected to do it by late this morning, and then he leaves to Mar-a-Lago, where he's going to host a couple tele-rallies. So for tonight's big event, we're going to do it at the West Palm Beach Convention Center. Trump's going to spend most of his time in Mar-a-Lago. So there's going to be the convention center, a VIP area at the convention center, and even more the VIP area at Mar-a-Lago. But to be in Mar-a-Lago, you have to be part of his inner circle or have a membership. Remember that now memberships are at 1 million each as of October. So I guess that's going to be probably the very top of his donors and advisors.
All right, Felipe, thanks very much for joining us. Felipe Marques there in Palm Beach, Skylar Woodhouse in Washington, D.C. I want to get to our guest right now, Bridgewater Associates former chief investment strategist Rebecca Patterson, here with us on set. Rebecca, you have suggested in the past that Trump threatens the foundations of America's economy and power, and I wonder if the $27 trillion bond market doesn't offer some checks and balances here. Can't the bond vigilantes do something in order to, save a worst-case scenario?
I think our bond market, to your point, $27 trillion is too big for even the biggest traders out there to move the market. But I think it is interesting when you look at former President Trump's policies. They've been estimated by a variety of nonpartisan sources to be relatively more inflationary. So that, all else equal, is going to push up the curve. But secondly, the tariff policies are likely to be inflationary. And then immigration, if he follows through. And all campaign proposals are ifs, right?
Especially on such an incredibly difficult and
Correct.
expensive
Correct.
undertaking. Even with the funding, how would you do it?
Let's say, though, you have a modest number of immigrants going out. The Peterson Institute said if you have 1.3 immigrants leaving, you have the 10% global, 60% China tariffs. Those two things together could lift CPI by 4 percentage points. So you've got the inflation picture. Then supply, if we have these tax cuts, we're going to push up bond supply significantly. And then demand. We're getting about a quarter of demand from foreign investors. If we're putting tariffs on all these foreign investors, are they going to want to continue at the same rate or greater to buy bonds? So I do think there's a risk higher for bond yields on the back of this compendium of Trump policies, if you will. But we'll see. Again, just because you propose it doesn't mean it becomes reality.
And I have a question about the funding. Right now, I think you wrote that 60% of foreign banks' holdings are in treasuries.
Correct.
if they even marginally change that, it would make a huge difference. What asset would they go to? Would they go to euro? Would they go to yuan?
Right. So this is what's saving the Treasury market, frankly, over the last several years, is there isn't a great alternative. Investors, especially central bank investors, care about liquidity, they care about transaction cost safety, and there is nothing like the U.S. Treasury market. However, it's a structural risk. If these tariffs are going on, we're not as close with our allies, they are going to see, where else can I go? The biggest one we've seen in the last few years, which you all talk about well and regularly, is gold. You know, China, Russia, a number of emerging market central banks in particular have been adding to their gold reserves in recent years, which is largely why gold is near a record high.
I want to talk a little bit more about the bond market. I want to talk about the action that we've seen so far, because you think about since the end of September, we've seen this fantastic run-up in bond yields, a fantastic run-up in the dollar as well to bring it to currencies. A lot of people have ascribed that to the Trump trade, basically, to Trump's odds of winning. And just to blueprint out a little bit here, if we were to see a Trump victory, how much do you think that it's already priced into these markets?
Yeah, I mean, it's hard to know exactly to quantify it, but I do think you can say there's some probability of a Trump victory being priced into markets here with the dollar and with treasuries. But thinking about the dollar in particular, you know, the dollar has been rising under the Biden administration, too. So it's a big question is what's driving these moves. If you have a Trump or a Harris victory and there's more fiscal stimulus, that can lift the long end of the curve, growth, reflation hopes. If you have a strong U.S. economy and supported equity markets, foreign capital coming into the U.S. can lift the dollar. That's been the story the last few years under a Democrat. So even if Harris wins, and the chances are good, it's so close, I don't necessarily think that means a sustained weaker dollar or sustained lower yields. I think it's a question of degrees, and there's going to be some volatility in the interim.
Rebecca, so much of these policies come down to Congress as well, and especially when you look at the House. It's pretty incredible how tight some of these races are, and the chances that you may not get a red sweep in the House. So what would that mean in terms of the ability to extend fiscal dominance, even if Trump does win?
Right, and I think this is such a great question because investors sometimes focus on a policy, and you need to understand when can the policy get passed, what's the probability of its passage, how impactful is it? So we know, sweep or no sweep, you can do trade, you can do a lot of regulatory, you can do immigration. So if Trump wins, that's likely to happen Jan 2021, right, or get started. The fiscal could take a little longer. Obviously, it has to happen in 2025. If you don't have a sweep for former President Trump, he's still likely to get a lot through, but it's a question for either Harris or Trump how much they could get through in a divided Congress, especially with our budget deficit now closer to 6% of GDP and debt closer to 100% of GDP. There's going to be a lot of pushback. And don't forget, we have debt ceiling, right? Jan 1, we hit the debt ceiling. It'll get extended to late spring or summer, but that's going to be a lever in this political fight that I'm afraid we're also going to be facing next year, whoever wins.
All right, Rebecca, we are just getting started. Stick with us. That is Rebecca Patterson helping us kick off our Election Day coverage. And tonight on Bloomberg, Joe Matthew and Kaylee Lyons will have a 2-hour Balance of Power special to kick off our election night coverage. That's followed by Bloomberg's Election 2024 special beginning at 7 p.m. in New York. This is Bloomberg.
And we're back with Rebecca Patterson. She's the former Bridgewater chief investment strategist. Where we left off was the policies that could matter next year in the case of a Trump win or a Harris win. And in the case of a Trump win, you are one of the people that have said you're worried about the course of inflation, the trajectory here. And the market still has, through the end of next year, almost 120 basis points worth of rate cuts.
Right.
What do you make of that?
Well, I mean, the good news is the Fed is able to bring rates down, even though the economy is pretty strong. So that's kind of Goldilocks, right? We're getting lower cost of capital and a fairly resilient economy. Q3 was around 2.8%. That's great for the stock market, for risk assets. The question to me with the election is next year, not the move this week or in December. But if we have about 90 basis points of cuts priced in for next year, and inflation starts ticking up, inflation expectations tick up on the back of some of the policies and policy proposals, The Fed might not be able to do 90, and that's what the market's discounting. So then for stocks to do well, you need an offset from a strong economy to meet those EPS growth expectations of 14%. We might get it. Like, one thing I wanted to mention, regardless of the fiscal that happens next year, JP Morgan put together an estimate, and I've checked it quickly. I think it's correct. They're expecting just in the next year, the top 7 tech companies spending over $500 billion in CapEx and R&D. I mean, so you think the Chips and Science Act, huge. It was $52 billion. This is $500 billion. So even if current fiscal stimulus is fading a little bit before the next round of whatever, you have this, what I would call, private sector stimulus. And that's going to feed into the economy in lots of different ways and provide another level of support. And I think sometimes investors forget about that. They're focusing on the fiscal because of the election, but there's also this private sector momentum, especially from tech, that's pretty significant.
Well, and that tracks with Facebook saying they're going to spend, what, $98 billion? Microsoft
like
renting a nuclear power plant?
Yes.
I mean,
yeah, and I'm glad you brought up tech because it's often lost in these conversations. And I want to talk a little bit more sector specific because you think about Trump's tariff proposals, for example. We focus on China, but he's promised a 10 to 20% tariff on all imported goods, not just Chinese imported goods. And you think about clothing, for example. Apparently 97% of clothing sold in the U.S. is imported. So if you think about sector effects, I mean, which industry stands to potentially be hit the hardest here?
I mean, I'm nervous, very nervous about agriculture in the United States if the tariffs go ahead. What we saw in the first term for former President Trump is that that was the bullseye for retaliation. Go after American farmers, go after things that are iconic to America, right? So Harley Davidsons, I think
Levi's, bourbon.
Yes. But farmers. And so the government had to give unprecedented subsidies to farmers to try to even things out. But even that didn't help them. And structurally, they lost a lot of market share to Brazil and things like soybeans. So the farm community has never recovered from this. And if we're going after not just China, but a number of countries, the retaliation is going to be a lot bigger than last time, I fear. And that's something that we have to think about in terms of how it hurts the business community, business sentiment, this business investment I just mentioned. What do you make of tax policy? Because that has a lot to do with animal spirits as well, right? And we see a big difference in Trump's proposed 15%, Kamala's proposed 28% on corporate taxes. Right. It only makes up, I think, 9% of receipts, but it still changes the way you think about doing business. And then, of course, how you and I and Sonali and Katie are affected individually, right? Right. It's going to be a big difference. I mean, the thing to me from Trump's first term versus now, in the first term, we had very large tax cuts, you know, corporate rate going from 35 to 21, and we had relatively small tariffs. This time we have, we'll see how big, what gets through, but smaller tax cuts being proposed and huge tariffs. So the degree of the influence from these two policies, if they get enacted as put forward, the math is going to be different. And remember, in 2017, Trump wins, the market takes off on hopes and then actual confirmation of tax cuts. But then in 18, when the tariffs started, we saw the S&P fall 20% between September and December that year on a combination of the trade war fears and the Fed saying, okay, this fiscal has overheated the economy, we're going to raise rates faster. So if you bought stocks on Inauguration Day 2017, by the end of 18, you made 4%. That's it. It was a round trip. So I think for everybody, it's important not to just think about tax policy or trade policy, but think about all of it together. And then the outside forces, like monetary policy, like China stimulus. If you're going to get your election trade right, you have to be putting it all together.
I was living in Germany, by the way, in 2018, and desperately wanted to buy a Harley Davidson Fat Bob, but it became too expensive for me because of, I guess, the tariffs.
Well, maybe get it in now. It's your birthday. Buy it today.
About the Harley for like 3 months now. Just pull the trigger, dude.
Okay.
Today's your day.
Yeah, today's your day. And it's interesting when you think about, there's actually a great story on the Bloomberg terminal right now about those election trades. And it goes down to, for example, even Centene and United Health, where they could have a $25 billion revenue drop if the subsidies under Obamacare, it goes down to the single stock level. I do want to go back to something you were saying before. I want to pull up the 10-year for a moment, because if you shorted it at the end of September, you probably have made a lot of money by now. And the question is, how significant is that trade? Do you think that that short trade can last until the end of the year?
I think one has to be super cautious right now. First of all, we don't know who's going to win. We don't know when the results are going to get known. And despite what they say on the campaign, we don't know what policies they'll prioritize. In 2016, the initial trade on Trump's victory was sell emerging markets. This is terrible. It lasted for, an hour or two. The Mexican peso weakened significantly against the dollar for a few days, and then it recouped everything. So I would not be chasing any of these trades right now. I would wait till we get through whatever this process is, whether it's tonight, next week, and then figure out what's going on. The one thing, and you all mentioned this at the start of the show, certainty helps. Right now, we're at peak uncertainty. And once we get an answer and we know the rules of the road we're likely dealing with, the economy is doing well. The Fed is cutting rates. This is still a decent backdrop for equity. So if we get a dip, it's probably a buying opportunity. But to your point, which stocks, which sectors, it will depend on the winner.
Rebecca, I learn so much every time you come in, and even with the uncertainty, I feel like you improve my perspective. So I really appreciate you being here with us.
She encouraged you to buy a Harley.
And that also, I will tell my wife. Rebecca Patterson, former Bridgewater chief investment strategist. The Boeing strike is over. Shares of the plane maker on the rise. We'll talk about Katie's favorite story next. This is Bloomberg.
All right, let's quickly talk about Boeing here, because we have an end to the strike. We have an agreement. Boeing workers agreed to a 38% wage increase over 4 years. They also agreed to enhance retirement contributions. We know that was a big sticking point. That ends a 53-day strike. You had 59% of union members voting in favor, and boy, was it painful to get here.
But no defined benefit pension.
No. We knew that there was going to be a lot of daylight there, and they did get some concession there. This is obviously good news for Boeing. A little bit of a reaction in shares, but shares still off about 40% year to date. This is Bloomberg.
Remember the 5th of November. Hopefully no gunpowder, treason, or plot. This is Bloomberg Open Interest. I'm Matt Miller. We are just 15 seconds away from the start of the cash trade on this Election Day 2024. You can see that futures are up mildly, 0.2% on the S&P, about 1/3 on NASDAQ futures right now. We do have Russell futures down, so the small cap's not faring quite as well on this day. I wonder how much volume we're going to see. I wonder how much volatility we're going to see, because, of course, it's a 50-50 tie right now. No one really knows who's going to win the election, and the differences, at least in policy proposals, are massive. You heard the opening bell down at the New York Stock Exchange. You've got Hyatt ringing the bell there down at the NASDAQ market site. You've got Movember, the people who first got me to grow a mustache, and I'm so glad. It's so comfortable on the top part of my lip. Katie, what have you got in terms of the major averages here? What are we doing on this 5th of November?
All right, a little bit of a rally to kick off Matt's birthday, of course. It's also Election Day, I hear. The S&P 500 currently higher by about 0.3%. Big Tech, your outperformer, at least at this moment, currently higher by about 0.5%. As Matt pointed out, a little bit of a downdraft in the small caps. They've been your mild outperformer over the past month or so, but the Russell 2000 currently off about 0.3%. A little bit more action if you look under the hood. Of course, Boeing, we're keeping an eye on that one, because workers voted to accept their new labor contract. That ends a 53-day strike that crippled jetliner production. That, of course, is just one of many issues facing Boeing at this moment. Shares down about 40% year to date, but at least for this morning, Sonali, up about 1%.
And Katie, I'm looking at here perhaps the next national treasure. We're looking at Palantir soaring, reporting second quarter profit just soaring, raising operating income forecast. U.S. commercial revenue expected to climb over 50% this year. Palantir adds another 14% on top of it, a 141% gain this year. All-time highs today, Matt.
Yeah, all-time highs for Palantir. It's a different story for Ferrari. The luxury car maker is lower after shipments declined in the third quarter. The drop, as you may guess, was led by China. In that region, deliveries slumped 29%. As a result, Ferrari, which has actually tripled in the past 5 years, so it's been up big, is down 6%. Today, 240 million Americans are eligible to vote. Let's take a look at the election trade. For that, we go to Bloomberg's Abigail Doolittle. Abby, what do you got?
Well, stocks today, as you all were just talking about, just mildly in the green. But let's take a look at a cross-asset picture since the time, roughly, when VP Kamala Harris entered the race against Donald Trump. So you can see stocks overall higher up about 12%. The fact that it's big tech, maybe a small nod against Donald Trump, since he's expected, his administration is expected, potential administration could be negative toward big tech. Invesco Solar ETF up slightly, maybe a nod toward Kamala Harris. Bitcoin, though, and DJT both up in a big way, so that would be a vote for Trump. As for the predicted odds, it's interesting. So the polls super tight. That was the case with the predicted odds yesterday. VP Harris yesterday in the lead. Now we have Donald Trump, the former president, at 55%. VP Harris at 50%, still close, but the betting odds favoring a Trump presidency right now. And then finally, irrespective of who wins, Katie, one thing we know, volatility. Take a look at this VIX. It is at basically the highs of the year. If we don't have the yen carry trade spike that preceded this period here. And it's interesting, you could have some investors buying volatility, agnostic of who wins. Steve Sosnick over at Interactive Brokers, though, yesterday told me he thinks this spike in VIX, this has everything to do with hedging around uncertainty in the election.
Well, it'll be certainly fun to see how quickly those hedges unwind. Abigail Doolittle, thank you so much. Let's keep the conversation going now with Miller Tabak, Chief Market Strategist Matt Maley joining us on this election day. Great to have you with us, Matt. And I want to talk about tail risks here and basically the possibility that we get a contested election. I stole this stat from RBC's note this morning that if you take a look at the 2000 election, the S&P 500 fell nearly 12% between Election Day and its December low. If we get a disputed election here, how big of a wild card would that be?
Yeah, Katie, I think it's going to be a huge wild card because we have even more uncertainty now around the world than we did back then. Now, I do have to admit that, back in 2000, we were at the beginning of the, the unwinding of the internet bubble. So that may have played a role. And of course, people say we have an AI bubble now. But, the geopolitical issues that we face, I mean, if we don't know who the president is, and especially if we don't know who's going to control Congress, both of our allies and our adversaries going to think, and that uncertainty, I think, will grow in a major way. And as we all know, markets don't like uncertainty, and they've kind of ignored it so far. But I don't think they'll be able to ignore that kind of uncertainty if it goes to that kind of similar situation to 2000.
We talk so much, Matt, about the Trump trade. What would a Harris victory mean today? Is that just status quo with the Biden administration? Are there any discernible differences in the little economic policy proposals that she's shared?
Yeah, I mean, it's so hard to know. I mean, and as one of your previous guests said, we don't know for what's actually going to pass. What are they going to be able to get done? What's going to be the makeup of Congress? I mean, if it's all Republican or all Democrat, that's going to be one thing. But if it's split at all, especially given that the any kind of majority, especially in the House, is going to be quite narrow, it's hard to know when that'll come to fruition. My big concern, to be honest with you, is that the uncertainty, even if we get a definitive winner on all these fronts by tomorrow or by the end of the week, we still have this situation in the Middle East. And I honestly think that the VIX has been elevated more so because of that situation than the election, or at least equally so. And as much as people would like to think that that's de-escalating, it really isn't. And I think that's something that people need to push back in the front of their focus as we move past this week.
Matt, to that end, there is this notion out there that after this election, the uncertainty clears up and then all roads lead to go to investing, whether it's certain sectors or the stock market or the bond market. But we are, like Matt has been saying, not far from all-time highs. Does the uncertainty persist into next year, regardless of the outcome of the election?
I think it does, because we have this, with the stock market trading at all-time highs. That's great. but it's also very, very expensive. And, you know, some people say, well, 22 times forward earnings isn't, in next 12 months of earnings isn't that expensive for certain reasons. I'd say that it is. But also you get 3 times sales. That's incredibly expensive. And we have a situation where earnings growth right now, I mean, as much as people talk about how good this earnings season has been, earnings growth for 2025, the estimates, has actually gone down slightly, only 1%. But, you know, with them, you know, we in 2023, when the market rallied 25% on zero earnings growth, we took all that growth from this year and next year. And so we need something more. I mean, as much as 14% growth next year sounds good, at 22 times earnings, we actually need something more than that. So, and then we have this concern about our interest rates going to stay high. That creates the problem with the valuations. And again, I have to go back to the situation in the Middle East, which I think is only going to get worse. I'm afraid.
Yeah, I think we can agree that there's always going to be uncertainty, whether it's political, economic, geopolitical, monetary, et cetera. But I do want to talk a little bit cross-asset here. Of course, we're speaking to you at 9:38 a.m. We tend to focus on equities, but you think about this election, the outcome and the aftermath, which asset class might stand to see the most impact? Is it equities? Is it the bond market? Is it currencies, for example? What should we actually be watching here?
Well, I mean, there's so many, and I think they're all, to say just one is difficult. But you're right, the bond market is going to be critically important. I mean, remember back in, it was just 6 weeks ago. We have a Fed meeting this week, of course, and at the last Fed meeting, everybody's saying, oh my gosh, you know, the Fed's going to cut rates by, you know, a gazillion percent. The interest rates are going to keep going down right into the end of the year and into next year, and that's completely turned on its head. Now people are saying, oh my gosh, interest rates are going to stay high. We have some people looking for the 10-year to get above 5% next year. My kind of feeling, though, is that you know, everybody was on one side of the boat and they were wrong. We've almost moved a little bit too much to the other side of the boat, and I think that we could get a surprise here. In other words, I think interest rates could come down. Will that really be bullish for other assets? Well, it depends on why it happens. Again, if you think that the Middle East has died down and that we're not going to get any worse, you also have to believe that Iran is okay with, I'm sorry, that Israel is okay with Iran becoming a nuclear power. I just don't think that's going to happen. So if the bonds rally in a flight to safety situation, we have it's a whole different can of beans. So there's a lot of risk out there still. We usually rally into the end of the year in an election year, but there's a lot of issues out there that I think are going to keep people on their toes.
Matt, thanks so much for checking in with us. Great to get your take. Matt Maley there from Miller Tabak talking to us just 10 minutes after the market open on Election Day. Coming up, Professor Wendy Schiller from Brown University joins us as Wall Street awaits the outcome of the election. Indeed, volumes, at least in the first 10 minutes, are a little bit light. We'll see if traders sit on their hands for the rest of the day. This is Bloomberg.
All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, DZ Bank raising Chevron to a buy. The energy giant, of course, beat earnings expectations last week. That was thanks to rising oil production in the Permian Basin. Next up, we have Telsey Advisory downgrading Dollar Tree, saying it's no longer a buy, also cutting its price target. The firm says that the departure of its CEO reduces confidence in the company. It also limits visibility on Dollar Tree's strategy. And finally, we have Bernstein upgrading eBay to a buy, saying that the stock's plunge following earnings last week is an opportunity for investors to buy the dip, Matt.
All right, let's get back to the election, shall we? Katie, as millions of Americans head to the polls in a tightly contested race. Joining us now is Wendy Schiller, Brown University professor of political science. Wendy is a registered independent, but you know, like the rest of us, I'm sure you've watched the authoritarian bent that Donald Trump displays, at least in his rhetoric. Nonetheless, I heard Oprah Winfrey in a campaign speech yesterday saying, and I quote, "If we don't show up tomorrow, it is entirely possible that we will not have the opportunity to ever cast a ballot again." Is that kind of rhetoric really fair? I mean, are American institutions so weak that Donald Trump and his Republican enablers could end democracy in 2 years?
No. I mean, I think it's highly unlikely. I don't want to be too sanguine about this, but it's highly unlikely. You know, the Constitution gives states the power to regulate all the elections, time, place, and manner of elections. And we have 50 states, and we have a lot of ambitious politicians in this country. So if you have Democratic senators, for example, U.S. senators or Democratic House members, Republicans are going to want elections to unseat them. And if the Democrats win the House, Republicans are absolutely going to want to preserve elections for 2026. Not to mention people who want to be president of the United States in 2028. And Donald Trump is, at the moment, constitutionally prohibited from being elected to serve an additional term. So whether he tries to challenge that or repeal the 22nd Amendment, that's part of the constitutional process. But no, I'm not concerned that he'll spend the energy trying to end elections or that Republicans will see it in their interest to end elections.
So highly unlikely in your words, and maybe not the best tactic, as you're saying, by Oprah Winfrey and the Democrats. But to be fair, I mean, Trump and his supporters have suggested similar themes. And I'm wondering, Wendy, in your view, is this just a feature of American politics right now, this very dramatic language, rhetoric, if you want to call it that?
Well, there's been dramatic rhetoric and language used for 150 years. I mean, this country has been divided, fiercely divided over other things in its past. And at this point in time, we are the most diverse, we are the most free, and we are the most participatory that we've been in more than 100 years. There are a lot of voices in America that want to be heard. So yes, we are hearing the very loud voices. Some of them can be frightening on, you know, any side of the political aisle. Political violence, for example, we have been a politically violent country, and we are still grappling with that, especially with the availability of guns. So we do have challenges here, but we are a noisy democracy. We've always been a noisy democracy, and the more people who can participate, like we're seeing record turnouts in voting, for example, the noisier it will get. And remember, in the past, voting suppression has been very fierce, particularly among African Americans, directed at African Americans. But women have just only been voting, frankly, for a little bit more than 100 years. So we have faced these kinds of difficulties before in a more closed society. Now we are more open, and now we're hearing more noise.
Wendy, I'd love for you to weigh in here on what comes after the vote, because there are a lot of expectations on election-related litigation. How might lawsuits start to tie up results coming out of tonight?
Well, you have to expect that we'll see a repeat of 2020. The Trump campaign has resources. They will challenge, particularly in very close counties, particularly in some of these swing states, if they lose. They'll challenge. They challenged last time, I think, a total of 60 court cases on voter fraud or, you know, misbehavior by states. They lost in, I think, every single case for the most part. So we have apparatus, we have secretaries of state, we have state governors that are prepared for challenges. I think they're also preparing, frankly, for potential violence in state capitals. We still have to get through the electoral college process in December, January 6th certification, and January 20th inauguration. There are many things to get through before we sort of settle on the next president. I don't expect as much of a violent reaction, theoretically, from the Democrats if Donald Trump wins definitively, but they do have the resources to challenge. And unlike Al Gore, who went to the Supreme Court, but you can argue maybe didn't make the most of all of his challenges in 2000, I think Kamala Harris will, particularly where it's extremely tight.
Actually, Matt Maley from Miller Tabak. Sorry,
Matt Miller.
Yes, Matt Maley from Miller Tabak just was talking to us, and he's concerned about, or at least alarmed by, the possibility of a tie. I know it's a remote possibility, Wendy, but a lot of people don't know it could happen. How unlikely is it? And then what would be the result?
Well, if there's a tie, the Constitution provides that the election a tie in the Electoral College, that the House of Representatives decides the election. And in that case, because of the way that it's structured, each state, gets a vote, and if Republicans have more members of the House in a particular delegation, they're going to swing that state's vote. So if it is a tie, it's most likely, not definitely, most likely would go to Donald Trump if all of the members of the House who are Republicans stay loyal to Donald Trump. So that's one possibility. Just given the breakout and given the polling and the trends and the impact of Senate races in many of these swing states, I don't think it will be a tie. I think if the Democrats can hold, particularly the incumbents in these swing states like Wisconsin, Pennsylvania, for example, Nevada, And if that's enough, it will lift Kamala Harris up in those states. So I don't see a tie. It's possible. It's happened before in American history in the turn of the century, 1800, and Thomas Jefferson won that in the House. So we're just gonna have to wait and see. We have a constitution, we have rules, we have the rule of law, and I think most Americans do not want to walk away from any of that. And I think that in the end, they will do their very best to keep it.
Wendy, we thank you so very much for your time today. Of course, hopefully we know just in a matter of hours, maybe days, maybe weeks at worst, but hopefully sooner rather than later. Wendy Schiller of Brown University. Now coming up, CoreWeave, one of the hottest AI startups gearing for an IPO. Details up next in our Wall Street Beat. And it's time now for the Wall Street Beat. AI cloud computing giant CoreWeave has selected Morgan Stanley, Goldman Sachs, and JP Morgan to lead its planned IPO. The company is currently valued at $23 billion, so it's a large one. We're going to discuss it with Bloomberg's Bailey Lipschultz, and they've hired the trifecta for this deal. Bailey, when you look out there, are you seeing a lot of companies waiting until next year at this juncture to go public? And are we just going to see a wave of mega IPOs?
The hopeful thinking is that we will see a wave of mega IPOs, Sonali, but that was the hope for 2024. So it remains to be seen. But yes, it does seem like when I talk to bankers, advisors, and companies, they are gearing up for 2025 IPOs. The big question is when, who goes first, and how quickly do we see a pull forward or a pushback?
What's the holdup? I mean, to your point, we've been saying that this is going to be the year for a couple of years now. I mean, is it interest rates? What is this nebulous uncertainty? Like, what do we need to see to actually see some of those pipeline companies come out?
Once we get past the election, the thinking is more people will at least have certainty to start baking in what the years out forecast could look like. But we still are seeing a divide between what sellers think their companies are worth and what buyers are willing to pay. If you're going public, you have to come out at a pretty hefty discount to your comparable peers. And if you're not growing as quickly as maybe you once were, it's harder to say, well, we think we're worth X billion dollars when the buy side says, well, that's great and nice, but we can buy your direct comp at a different multiple, and they're already publicly traded.
What are the biggest potential IPO candidates? I mean, were we talking about SpaceX yesterday?
We were, but I doubt they'll.
I know. I'm just saying, like, what is there that people think could go at huge numbers?
The big three that people are pointing me to for next year through the summer are CoreWeave, are Klarna, Chime, and Medline. Those are the four that people are really excited about.
I've heard of one of those. That's good.
Exactly.
You didn't say OpenAI. You didn't say SpaceX. You didn't say Stripe. Some of these big, well-known private companies that seems like it's a happy place to be, the private markets.
Well, the sense that I'm getting when you point to an OpenAI, they have to pivot to that for-profit model. So they have their own kind of issues or kind of hurdles to get past. When you look at other companies within the space, like a SpaceX, Elon Musk seemingly is very happy to have that be private.
Bailey, this is a company that drew an investment from Cisco for that $23 billion valuation, among others. Is this a company that would have otherwise sold? You have two administrations here. Both are not thrilled about the idea of big tech getting bigger. Does that open the window more for these companies to go public instead?
I think it depends on the company. So if you do see maybe a more lax FTC and you see the bar for M&A lowered relatively tremendously, you're still looking at a $23 billion company. Who the logical buyer would be, I think, is the question. But it certainly creates that dual track positioning for some of these companies, especially when, in theory, you could say, all right, well, Microsoft now can all of a sudden open its checkbook and go out and acquire companies, where maybe with the current administration, those deals would be more difficult to get across the finish line.
All right, Bailey, thanks so much for joining us. Obviously, it's a fascinating topic, and it's nice to get away from the elections for a second. Bailey voted this morning, but got no sticker.
That's so sad.
What's
I got
the
my
point?
sticker on Sunday. I wore it all day.
I hope you tweeted about that.
I did. I see. I'm not even on camera. They already got rid of me. I did not tweet about it, but I should post.
Come back.
All right, get out of here. Coming up next, Chris Marangi joins us from Gabelli Funds. Plus, we're going to talk to the Snap-on CEO, Nicholas Pinchuk, and the founder of KOVAL Distillery to talk tariffs on whiskey. This is Bloomberg. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld. We're taking a look at markets right now. The S&P 500 actually at a session high right now, up about 0.8%. We're awaiting some eco data, the ISM services. You can see big tech also making a run for it. The NASDAQ 100 up about 1% as we get some of those isms. And Sonali, they look pretty good.
They do look pretty good, coming in above estimates. And for more on the data, we are going to bring in Bloomberg's Michael McKee here. You're seeing the index rise to 56. The estimate was just under 54.
Yeah, big news this week, the Fed meeting, we're at 56. Does that mean that the Fed is going to cut rates even more?
Yes.
Well,
25 basis
you
points.
just, oh, okay, 25.
Yeah.
I said even more. 56 is the number. 54.9 was the previous number. Business activity, which is essentially kind of the headline number that matches the manufacturing number at 57.2 from 59.9, so not quite as good. But new orders, 57.4 from 59.4, so not as good. Inventories, 57.2, 58.1. So this all doesn't suggest a really strong report. The headline number is not connected to the others. This is not a summing issue. So people are more confident in general, but underneath it isn't as good. Prices paid 58.1 from 59.4. That would be considered good news. And then employment, which doesn't really matter because we already have the payrolls report, but employment 53 from 48.1. So not a bad report, not a great report, but the headline number certainly catches people's attention.
Right.
We didn't see the same kind of strength in the S&P's numbers today.
You take a look at the bond market, clearly reacting across the curve from the 2-year to the 10-year out to the 30-year. We know pretty much what's going to happen in just a couple days. Talk to us about how active the debate is for December, though. How high is the bar for the Fed to basically do nothing?
Well, I think the debate is pretty strong on Wall Street, but not at the Fed yet, because they're going to wait and see what happens. I don't think they have a particularly firm idea of what they want to do. They're willing to go
For
either
Thursday?
way. No. For December.
Because Thursday, they're set,
Thursday,
right? I mean, they know what they want to do, and the jobs number gives them cover.
If we had that kind of certainty in the election, everybody in America would be happy.
We'd have nothing to talk about.
We'd have nothing to talk about. But once we get through the Thursday Fed meeting, we'll have a lot to talk about because the data will be very important at that point. If we get strength, a big rebound, say, in jobs, and if inflation doesn't go down any further, then maybe you get a question about whether they do go on hold in December. If we see continued weakness, then they'll start to price in more of a move in December. But it's really hard to know at this point what they're going to do at that meeting.
All right, Mike, we will continue to check in with you to keep ourselves informed. Thank you very much. Michael McKee, he is our Global Policy and Economics Editor. Let's bring in right now Chris Marangi, Gabelli Funds Co-Chief Investment Officer, to talk about his outlook. And Chris, obviously I'm going to ask you on the 5th of November about the election. What kind of outcome do you expect, or is it a toss-up for you as well?
Well, the only thing that's not a toss-up is that we get this over with. I think that's a proposition almost all Americans would support. And that leads me to my first point, which is that clearing this event, I think, will be positive for the market. That's the first leg of analysis here. When will we get a definitive winner and a definitive winner in Congress? And then secondly, then we focus on some of the differentials in policy, whether that's tax and fiscal policy, trade, geopolitical, et cetera. Wall Street's been placing their bets. We've watched that seesaw in some of the sectors that are indicative of one candidate over the other. Ultimately, it doesn't really matter, or it probably doesn't matter as much as we think it does.
All right, so number one, we got to get this over with. Let's talk about your playbook here. You take a look at what Goldman is saying ahead of the election and the reaction function in markets. They see a Trump win with a Republican sweep as a 25% probability, but that would be the best case scenario for the S&P 500. The worst case, which they see a 40% probability of, would be a Harris win with a divided government. They see actually a decline of about a Harris with a Democratic sweep. That's a 5% probability, so they don't really see a high chance of that happening. That would be the worst case scenario for the S&P 500. How does that compare with your mental blueprint as we head into some actual results here?
Yeah, I think that's about right. If for no other reason than muscle memory, Trump win will be positive for markets. It certainly will be positive for certain sectors of the market, small cap, crypto, regional banks, some areas of healthcare and energy. But obviously that gets offset a bit by likelihood of higher rates and obviously some controversy over tariffs. So another way of saying that is higher earnings, but a higher discount rate. I actually think probably over the medium term, the best outcome might be a divided land with Harris as the president and both houses of Congress in Republican hands. I call that sort of status quo plus, where almost by necessity, President Harris would have to compromise, and we kind of know what her playbook would be.
Chris, how are you expressing any of these views today? To the extent that you're putting chips on the table today, or to the extent that you're waiting for a clearer outcome, what do you buy? What do you sell?
Yeah, obviously there are going to be short-term moves in the market, and I think we have to be willing to let go of that FOMO, let go of the urge to participate in some of those very short-term moves. Yeah, obviously we've seen a gravitation or rotation to small cap in particular that began a few months ago. Some of that is the Trump trade. Some of it is just the disparity in valuations and more bullishness about a soft landing. And I think that continues no matter who is president. So we're not making any particular bet based on who's in office.
When we find out, Chris, let's say, for example, Harris wins, because we talk endlessly about what would happen if Donald Trump won. If Kamala Harris wins, how does that change your investing perspective? What would you do to your portfolio to rearrange it that's different than you would under the Biden administration?
Yeah, again, I called it status quo plus because I think that's true. Probably not much changes. We'd probably be more inclined to make some bets on companies that have tariff exposure that maybe we're a little afraid to invest in because of the potential for Trump to win and impose tariffs, et cetera. But ultimately, we're looking for companies with moats that have pricing power that can survive any political economic environment.
So politics-proof sort of companies that you're looking for with those moats. And with that in mind, I mean, where do you see the most opportunity right now? When you apply that analysis to the current landscape in the equity market, where does that lead you?
Well, a lot of the same, obviously high quality names, relatively defensive. But we do see, absent any kind of political dynamics, we do see opportunity in smaller and mid-cap names, just because they have lagged some of the Mag 7 so much. And, obviously, those Mag 7, we own a few of them on the value side of the house, more on the growth side of the house, are fabulous companies. And it's understandable why they've done so well. But again, as we kind of normalize rates and head to what looks like a soft landing, we see a lot of good opportunities there. And by the way, the other dynamic is, I think in either case, we're going to see a resurgence of M&A, but obviously more so if Trump is elected.
Chris, you're reading my mind here, because I was looking at an index of Bloomberg hedge funds to see how event-driven funds have been doing. And if you're an event-driven fund in this market, you've been up almost 12%. You've done just fine. Merger arbs in particular haven't done as well. You've been up about 6% over a 1-year period on average. So what are you really betting on here? Because at the end of the day, are we really seeing investors bet more and more off of spin-offs, companies getting smaller to be able to focus in and not really worry as much about that antitrust story? Or do you focus on consolidation going into next year?
Yeah, all of the above. I mean, I think consolidation and financial engineering are alive and well. They've been stunted a bit over the last few years because we've had uncertainty. And now, we'll presumably know, hopefully in the next couple of days, what the FTC looks like, what the FCC looks like, all the other relevant agencies, and companies will be able to make decisions about what they want to do. And so, we do think that obviously under Trump administration would be friendlier to M&A in most sectors, with some possible exceptions, including media. Consolidation is the name of the game as more companies try to compete against those Mag 7.
Hey, Chris, you have an historical knowledge bank on media. You covered media for so long. I have an interest in media, obviously, especially financial news media.
Right, of course.
And you have an interesting take on Comcast. What do you think they're going to do with maybe CNBC, for example?
Yeah, so I like talking about politics. I like talking about deals and financial engineering, especially in the media sector, even more. And I think last week's news that Comcast was considering a separation of the NBC cable networks sort of got buried. It's early, obviously, but that is been the dream for a lot of Comcast investors like us. And I think that vehicle, that NBC cable network vehicle, would be a consolidation entity and would probably roll up that industry, which requires a different kind of capitalization, scale, et cetera. Those are good cash flowing businesses. They're just not growing and probably are unlikely to grow for a long time.
All right, Chris, got to leave it there. Really appreciate your perspective, of course. That is Chris Marangi of Gabelli Funds. Now, coming up, we head to two key states that both candidates are looking to secure, Pennsylvania and Michigan, as our coverage of the 2024 election continues. This is Bloomberg.
I'm good.
All right, we turn back now to the U.S. election, and the states that have seen the most political ad spending, of course, are Pennsylvania and Michigan, the two combining for 34 critically important electoral college votes for both candidates. We're joined now by Bloomberg's David Gura. He joins us on the ground in Philadelphia. And David, as we know, of course, Pennsylvania, a crucially important state. Give us a sense of the stakes.
So we know from the latest polling that this race is neck and neck, the presidential race. The Senate race here is very close as well. And I was at Kamala Harris's closing rally last night, just behind me in front of the Philadelphia Art Museum. And something that she and other speakers acknowledged is the presidential election historically goes through Pennsylvania. This is a critical state with 19 electoral college votes. So as these two candidates kind of game out what the calculus is by which they could reach that 270 vote threshold in the electoral college, Pennsylvania is crucial. Yes, you can lose it and still win the election overall, but both of them really want to win this state and are working very hard to do that all the way through Election Day. You mentioned how much money has been poured into this race and the one in Michigan. I was on the streets yesterday talking to voters, and to a T, each one remarked on how exhausted they were by the level of outreach, the number of ads that they've been subjected to here over many months. So all of that money has manifested itself in just kind of an inundation of advertisements, guys.
David, what do we know about who has voted already, where they've come from, anything about their backgrounds, and what it means for what each candidate needs to bring the state over the edge for themselves?
So we've seen here something emblematic of a broader trend, and that is Republicans embracing early voting more than they have in the past. And so the way that works in this state is you can request a mail-in ballot in advance of the election, and you can either mail that in by the U.S. Postal Service or take it to offices in your particular county. If you don't do that in time, you can show up today. They'll take that mail-in ballot and you can cast a provisional ballot. But to say, both parties have really encouraged voters to do this. I was looking at Allegheny County, which is a big one here in the state. By 9:30 this morning, more than 100,000 of those ballots that have been mailed in had been opened. So that process is underway. The counting of those ballots is underway. And I should note, a quirk of this, too, is though those ballots may have come in earlier in the last few days, they can't open them and begin counting them until today. Now, I was on the phone with the head of the Democratic Party in Lancaster County, another big kind of swing county in this state, and I said, look, are you kind of encouraging all Democrats in that county to vote early? Is that what your objectives were here? And she said, well, they're encouraging those who want to do that to do it. But she actually said coming out of the pandemic, when that was the default, when so many people did that, there was a group of the electorate, kind of the young to middle-aged part of the electorate, who missed going to the polls, missed the ritual of Election Day. And she said she still expects a really sizable turnout in that county today of those who want to go back to that ritual, want to go to the polling booth and cast their ballots in person.
Well, it's a rich tradition, especially for a place like Philadelphia, full of so many rich people. I think of, when I think of Philadelphia, the Main Line, and Marion and Haverford. And it's very different than when I think of Erie County, right? I mean, how important is Philadelphia compared to the rest of the state? They're different groups of people, aren't they?
There are different groups of people, and everyone with whom I've spoken has stressed that this is a large and varied state. And so, yes, you have Democratic strongholds on the western part of the state. Here around Philadelphia, historically, it's Democratic. But then you get into some of those suburbs that you mentioned, and you have more contested counties where there are Republicans. And there are places that we're kind of watching. North Philadelphia, for instance, is a place where if we don't see Democrats coming out to the degree to which they have in the past, that'll be an indication perhaps that Kamala Harris hasn't gotten those voters excited about voting in the election today. So, I think the old saying goes that you've got, the eastern part of the state, the western part of the state, and a much more rural and traditionally Republican part in the center of it. But the conversations that I've been having with local party officials, both Democrats and Republicans, have said they see a lot of these counties as contestable. I was on the phone with the head of the Republican Party in Lackawanna County, which is where Scranton is, of course, Joe Biden's hometown. After Joe Biden dropped out of this race, he began to see that as a much more easily contestable county than he had in the past. He was going into this election feeling like Republicans lost in the last cycle and the one before that. His hope was they would lose it by just a slimmer margin this time around. But again, with Kamala Harris as the Democratic county, he thinks that there's a chance now that Republicans could do better than that in the election today.
David, good luck tonight. We thank you so much for your reporting. That is our thanks to Bloomberg's David Gura reporting from Philly. We're also going to go now to another key swing state, Michigan, and its 15 electoral votes. Joining us from Detroit is Bloomberg's Romaine Bostick. What do we know, Romaine, so far about voter turnout in the state and what each candidate needs?
Voter turnout has been high. This was the first year that the state of Michigan had early voting, and it looks like at least 45 to 48% of the voters took advantage of that. That's how many ballots had been cast prior to today, and that's one of the reasons why the scene behind me here at a polling location in Northwest Detroit is not quite as busy as what it would normally be here. A lot of folks made sure to get out early, and election officials are telling me that they are expecting the potential for record turnout. The last big turnout that we had was back in 2020 when about 70% of registered active voters turned out to vote. What they're telling me right now, Sonali, is they're expecting that number to be much higher here in 2024.
And of course, we're talking about the presidential election, but let's talk a little bit about the down ballot races as well. What do we know about some of the congressional races going on in the state?
This is where a lot of the battles are really shaping up. Remember, this is a swing state, and right now on the presidential level, the polling between Harris and Trump is only about 1 percentage point. When you look at some of the key congressional and Senate races, it's even tighter there. Two big open seats, the 7th Congressional District and the 8th Congressional District, both in the central Michigan area, but both kind of two different districts. One much more blue collar, working class, a manufacturing strongholds of Flint and Saginaw, the other in the Lansing area. Both of those seats are up for grab. Both of those seats had been run by Democrats. Both of those seats, at least based on the polling right now, are leaning slightly to the GOP side. The other key race to keep an eye on, Katie, is that Senate race. That is the open seat left vacant by Debbie Stabenow. Right now, Mike Rogers, the Republican, is trailing Alyssa Slotkin by as much as 4 to 5 percentage points. So it is possible there that you could get a Senate seat staying in the Democrats' hands here in Michigan. That would help the Democrats try to retain some modicum of control of Congress. But a lot's going to come down to those two open seats in the House of Representatives.
You know, it's interesting. Younger people maybe think of it as a red state, but historically, Michigan has been a Democratic stronghold, and far more voters are registered with the Democratic Party in Michigan than Republicans, right?
Yeah, more than 40% are registered as Democrats, just about 37 Republicans. There's a big independent population here, roughly about 19 to 20%. But it should be pointed out, too, I mean, there are a lot of people coming into this election cycle and scratching their heads, and they're saying, who exactly are the undecided voters this late in the campaign? Well, I spent a lot of time over the last 48 hours going around, and there are a lot of undecideds. And that's largely because some of the issues that really resonated with folks in past election cycles that made this such a Democratic stronghold, those issues have really been upended, whether it's tariffs, whether it's the war in Gaza, whether it's the war in Ukraine. A lot of folks who were voting blue in past elections have said they're going to be voting red this election, or maybe, Matt, not voting at all.
Romaine, we thank you so very much for your time. Of course, from Michigan, that is Bloomberg's Romaine Bostick reporting from Detroit. And tonight on Bloomberg, Joe Matthew and Kaylee Lyons will have a 2-hour Balance of Power special to kick off our election night coverage. Follow Bloomberg's Election 2024 special beginning at 7 p.m. New York time. This is Bloomberg.
All right, it's time now for Social Climbers. The company's making waves this morning. And first up, Bloomberg has learned that Apple is exploring a push into smart glasses as it conducts an internal study of the products on the market. Now, this initiative, codenamed Atlas, It got underway last week and involves gathering feedback from Apple employees on the smart glasses. Apple declining to comment. Finally, speaking of dining out, franchises of the recently bankrupt TGI Fridays chain are facing a run on $50 million in unused gift cards. TGI Fridays is responsible for reimbursing a franchisee when a gift card is used, but now that the chain is bankrupt, stores want to make sure payments keep coming if patrons flood their locations. The potential liability here, it's so large because the vouchers are valid forever. Going to follow that one, a pretty interesting one, but let's take a check on these markets. Of course, it's election day. It feels like the after hours trade is probably going to be more interesting than the current trade, but things are getting a little bit more heated. If you take a look behind me, you have the S&P 500 higher by about 0.9%. You have big tech leading that upswing. The NASDAQ 100 currently higher by about 1.1%. Of course, volume has been back and forth, so we'll see whether that translates into more volatility. And then you take a look at the bond market, really moving higher after we got those ISM services figures out at the top of the hour. Stronger than expected. You can see 10-year yields up about 7 basis points. Now coming up, Snap-on CEO Nick Pinchuk. He joins us to discuss how the mechanics of America are feeling about the candidates on Election Day. That conversation up next. This is Bloomberg. Well, grassroots voters and small businesses who have been navigating uncertainty in recent weeks will be watching the result of the election closely. Here to tell us what he's hearing from members of our economy is Nick Pinchuk. He is the CEO of Snap-on. And Nick, I was reading through your third quarter earnings call. An analyst asked you basically what the effect of tariffs on imports would mean for Snap-on. You said this in response: welcome to the Mad Hatter's Tea Party. Nobody knows what actually is going to happen, so you can't even make a pronouncement. And Nick, that being said, I am curious, when it comes to Snap-on's businesses, how are you game planning the different scenarios here?
Oh, look, it's tough to game plan because, Mad Hatter's Tea Party, you could call it the Twilight Zone. I mean, it's the people, I think someone said on Bloomberg this morning that nobody knows anything, and I think this is part of it. You don't know because the candidates are firing ideas of thermonuclear proportion. Things like, we're not going to tax tips, we're not going to tax overtime, we're not going to have income tax at all, we're going to tax unrealized capital gains, we're going to tariff everybody under the sun, and you don't know what's going to happen in that situation. And these are things that are going to be difficult to get through Congress. They're going to be tough execution, and they're going to be things that are possibly unintended consequences. So even when the election's over, and either your candidate is won or is not, you're not going to know how either of these candidates are going to play in the future. So it's tough to plan. But having said that, if you're just talking about tariffs, Snap-on tends to make in the markets where we sell. It's part of our philosophy. We believe, like, being up close and personal to the customer allows you to customize the product to just what the customer in that environment needs. And it's worked for us for years and years, and it continues to work. It's one of the reasons why our stock was up in the quarter, because we had profitability, even though the sales were down. People say that, onshoring American manufacturing is going to lead to inflation. Well, the prices may be higher, but if you look at the EVs in China, you realize that the Chinese manufacturers are making hay in China and leading the world in EVs because they're adjusting to that specifically for what that great population wants. And you can do the same thing when you manufacture nearby. So onshoring, the prices may be a little higher for a while, but the American worker is a strong force. He drives productivity, the costs come down, and the products are better for the buyers that are right there in the market that you're making.
I also imagine, tariffs wouldn't have any effect on Snap-on because you make the tools that you sell in America in Kenosha, Wisconsin. We were just talking about it. You have a 150,000 square foot manufacturing center out there. And not only that, but you don't really have any competitors that don't make tools in America. It's not like a mechanic is going to ditch Snap-on and buy Chinese-made tools, right?
Well, actually, we do have competitors who don't make them in America. This is why Snap-on is number one. One of the reasons why it is because we do make up close and personal. And what we do, Matt, you know this very well because you're a guy who repairs stuff. is we make the tools that solve the particular problem. Some of them are relatively low volume tools, but we've learned how to manage that complexity. We make many more SKUs than any of our competitors, so we can address those very difficult problems, and people will pay for that because it gives them the mechanics. They get productivity, they solve the jobs faster, and they can make more money. One of the things about people, I say, the people who worry about onshoring, and they say, gee, if we onshore, we'll have to use American workers. Well, that kind of is kind of a negative for American workers. I said on your show the last time, and I think this is still true, when you hear words like that, it is kind of general pessimistic view about the capability of American workers. We say American workers are not the question. The American worker is the answer. And because if they can be properly enabled with skills, they are motivated and committed and capable and can beat anybody who imports. Either maybe the cost isn't as low, but the utility of the product will be better.
Nick, the uncertainty is palatable, and I can certainly understand that there's a lot that we don't know. But when you hear these election promises, what keeps you up at night? What are you most concerned about at the end of the day that could see the light of day after this election?
Well, Sonali, here's the thing. People ask people, have they let me talk in terms of the people of work. We call on 1 million technicians every week. And we have in America about 3,500 franchisees who do this, and we call on 300 garages. And what they say is, when you ask them about the outcome of the election, what are you worried about? It has to do with how people feel about the reaction. People say Americans have lost faith in democracy. Actually, in a way, Americans have lost some hope, because what they and I are most worried about is someone will get elected, it looks like, going to be in a very slim majority, declare a mandate, and then proceed to nurture their base, proposing policies which 49.5% of the people didn't want, were sort of against. And the idea is, despite what people say about, I'm going to be the president for all the Americans, it's sort of like the Harry Chapin view where his lost love leaves his taxi. She's wealthy and successful, and she leaves and she says, we must get together. But he says, I know it'll never be arranged. And when people hear candidates say these days, I'm going to be the candidate for all America, they believe that they won't be. They won't bother to try to compromise and enlist everybody and represent all of America. And therefore, they have no hope in getting what they want in working together with those people. The National Association of Manufacturers just sent out a letter to the next president saying, we want to work with you because we think manufacturing provides for the general welfare, and we want to work with you to make it better.
Right.
But in a way, sometimes who's ever elected by a slim majority doesn't pay attention to that.
Nick,
they view themselves as the agents of those who put them in place, the base.
Nick, I didn't get your reference, but I get your point. And
Harry Chapin is a songwriter. He wrote Cats in the Cradle. This is the Taxi song.
Taxi. I'll sing it for you sometime.
I'll do my own research after the show, but in the minutes we have left with you, I do want to get a little bit away from politics, because I was just taking a look, of course, at some of your performance this year. You referenced that third quarter strong earnings showing, and of course, your shares were up 14% in October alone, so a big rally there. You take a look at some of the research. Bloomberg Intelligence suggests that some of your growth is coming basically from aging vehicles, that you have people doing DIY repairs on their own vehicles that are getting older rather than, of course, buying new vehicles. I'm curious how you're seeing the different dynamics there.
We don't sell to DIY people. If there's any commandment in Sapon, is thou shalt not sell to DIY if you can help it. But generally what's happening is there's a lot of things. The vehicles are getting more complex. As they get more electronic, the work gets more complex. They need different tools. That's number one. Number two is the vehicles are aging. And as they get more electronic, mechanics need more decoding. And we have databases with our diagnostics that are up to 415 billion data points. And we have artificial intelligence and natural language processing and machine learning that decodes that and allows the people who are maintaining the cars to do them much faster. So that's what's selling for us. What happened in this time, I think why our stock went up, is the mechanics in the garages are uncertain. They're cash rich, they're confidence poor. They don't want to buy things like the boxes behind me, which they have to pay off in 4 or 5 years. They want to pay short payback items. It puts a hole in our product line. It reduced our sales, but we pivoted to sell them the smaller things, the quicker payback items, which are very profitable. And so our sales were somewhat attenuated, not bad, 1.1%. But our profitability was up 80 basis points, the highest third quarter we ever had, on gross margins that were up 130 basis points. And we were more profitable even though we kept spending on our product, on our brand, and our people in the future. Because when the uncertainty goes away, we want to be at full strength. That's why the stock went up.
Nick, what's your view on inflation right now? You sell to, 1 million mechanics around the country and many more, I'm sure, around the world. In terms of car prices, we can't afford new ones. Insurance is too expensive. I filled up at a gas pump today for $5 a gallon. How are you keeping Snap-on tool prices, which are fairly high, at a level that people can afford them?
We generally, certainly during the big pandemic difficulties where supply chain was bad and we were buying that spot, we were buying higher prices and we raised our prices. But generally, we don't really price too much, actually. None of our growth really comes from pricing. It comes from new product that provides more value. And then we have a culture of rapid continuous improvement where everyone on Snap-on knows their job is to get up every day and to figure out how to make their job easier. We have an idea around this where we have a badge that represents this. The people are in the middle. And then every day or periodically, they look at what they do in the factories and the design labs and try to figure out how to make it better. Then we bring in technology. For example, at Milwaukee, we have 5 times as many robots as we did just a dozen years ago. And then we train the people in the technology and celebrate it and start again. But the big point about that, our most important resource is the people. So we put technology into the market, into our operations to amplify the energy of our people. And that seems to work for us. So we keep driving our costs down and therefore able to give more value to our people, even in inflationary times, to our customers, even in inflationary times.
Nick, we appreciate you so much for joining us today, talking about the elections and your business, the labor market. We really covered a lot of ground there. That is Snap-on CEO Nick Pinchuk. Now, coming up, we're going to discuss an upcoming levy on the whiskey industry and how either candidate might affect them with the president and founder of KOVAL Distillery next. This is Bloomberg. Tariffs have been featured very heavily this election cycle, and one product is already set to be hit by one if neither candidate does nothing to change it. In March, a 50% tariff on American whiskey exports to Europe will snap into effect unless the EU and U.S. can come to an agreement to stop the levies. Joining us now to tell us what she would do in the sector is KOVAL Distillery president and founder Sonat Birnecker Hart, and talk about your expectations, both from this election cycle and what you expect either candidate to do in March and how that would make the biggest difference for you.
Well, at the moment, I don't think it's really clear what is going to happen, except that we are going to need to contend with these tariffs. They are expected to be reenacted, and that would be a dramatic problem for everyone in the spirits industry. I mean, our exports in the craft industry in particular have been essential for our growth. Craft spirits companies have relied on export as a way to build their companies up and to grow. And it's been very helpful. In fact, exports for craft brands were up about 5% this past year, at a time in which we'd been experiencing a lot of other issues in growth, at least locally in the national market. So exports are important.
Well, Sonat, I'm curious about how you make long-term decisions as a business owner, a business operator in that environment with all that uncertainty. You think about, what goes into your business. You have to buy grain, you have to buy barrels and more. You have to decide how much and when to buy them. How do you put together a decision tree given all of these unknowns?
It's very difficult, in part because, while we're always playing futures, we're also thinking about the past. And the past is that we've spent decade growing our business in some of these markets. If we think about Europe, Europe is one of the most important export markets for all spirits in the United States. I believe it's around 40% of our export. And with that in mind, you know, spirits companies, whether they're small like mine or large like one of these legacy brands in America, you go into these markets, you develop relationships. There's a lot of time and energy that goes into that. You're building trust with your partners. You're building trust with the, you know, the avenues that are selling your products in those areas. And when they see that tariffs are on the horizon, that makes them nervous. So we've already been through this before, where we've had to reassure our partners that we're still invested in these markets, that all of the work that we've done was not in vain. We still were going to these trade shows, still going to try and promote our products abroad. But then when you think that these tariffs are not just going to be, you know, what they were before, but 50%, that's dramatic. That's really actually quite catastrophic, particularly for members in the craft industry that have been, you know, holding on to these relationships despite all of the other things that have happened, despite the challenges that we experienced during COVID, despite the challenges we're experiencing in general in the spirits industry, which is not seeing the kind of growth that it was before. You know, it's very, very difficult. So do we want to lose those relationships? Once you're off the shelf, it's 1,000 times more difficult to get back on.
Yeah.
But it's also questionable, do we want to put away a lot of product, you know, for a future that's very uncertain?
Oh, look what happened to Bud Light when they lost shelf space. And that's, I mean, really a household name. On the other hand, you know, it's $6 for a 6-pack is a lot different than a bottle of good bourbon. You're going to pay pretty much what you have to, right? And if you're sitting in Berlin, you're going to want to buy bourbon that's made in America. You're not going to buy bourbon from some other country, just like you won't buy scotch that's made in, you know, Montana, right? It seems like spirits is kind of the OG protectionist market because all of these different kinds of drinks are made in their home country and they need to stay there. How much is that still true, Sonat?
Well, bourbon is an American product. You can't make bourbon anywhere else. And so if you are sitting somewhere in Europe and you want bourbon, you can only get it from America. 63% of all spirits exports are whiskey. And I would say bourbon is a huge part of that. And that's really, really going to be problematic. If you think about it, you know, the U.S., we export about $2 billion in spirits, and whiskey being a large part of that. And, you know, if all of a sudden it's going to cost so much more, you might want to try a product from somewhere else. Maybe some of these new emerging whiskey markets like Taiwan or like Japan, or even within Europe, you have a proliferation of local brands, especially within the craft industry. If we think about the craft movement in general, it was actually pretty much worldwide. It started in the United States. In the early 2000s, you had only about less than 100 craft distilleries in the United States. Now you have about 2,600 craft distilleries. There's that same proliferation in Europe. And those brands are also trying to get shelf space. Right. Luckily, a lot of American brands got in there. And, you know, we're all about, you know, the American spirit. And people love that. And they want to enjoy that. They want America to be part of their celebrations because we stand for a lot of great things.
All right, Sonat, we're up against the clock, but that feels like a good place to leave it. Really great to get your perspective on this election day. That, of course, is Sonat Birnecker Hart. She is the president and founder of KOVAL Distillery. Now, coming up, the presidential race, not the only race worth watching today. We'll take a look at the battle for Congress next. This is Bloomberg.
All right, today is more than just the election. It's my birthday. But also, the shape of the next Congress is on the ballot. It's more than just the Oval Office. Right here to look at those races, down ballot, as we say in our industry jargon, is Bloomberg's Mike Shepard. He's in Washington, D.C. Mike, obviously, we're all very focused on the top of the ticket. But down ballot is really important as well because that's necessary to help put so many of the proposals we've heard from these two candidates into action. What do they look like right now? For example, what's the likelihood that the Democrats can hold on to the Senate?
Right now, based on the electoral map, they face an uphill climb. It would take a really strong performance from the party led by Kamala Harris to be able to retain the chamber. Just look at the map. There are 3 seats that they are trying to defend in states that Donald Trump won handily in both 2016 and 2020. They include Montana, Ohio, and then also West Virginia, where independent Senator Joe Manchin has retired, and the state's Republican governor is favored to win his seat. And then beyond that, there are other closely contested battleground states that also have Senate elections, and that is Pennsylvania, Michigan, and Wisconsin, and any of those could tip any which way. It is a close race, and we're also seeing it not only at the top of the ticket, but also in races that matter for both parties. And here's why. If the party that controls the White House also controls the Senate, it really clears a path for the president to be able to do what they want when it comes to nominations, and that's really critical. Think about the picks for the Federal Reserve, which our audience really cares about, the Supreme Court, which the whole country is always focused on, especially when we talk about reproductive access to reproductive care, and then also cabinet picks.
Right.
So there is a lot at stake in the Senate there.
Yeah, and as such, I mean, most of the investors we talk to want to see a divided government sort of temper the worst impulses on both sides here. Let's talk a little bit more specifically about some of these state races, because I'm taking a look at your notes. You highlight New York, for example. When you think about that race, what's at stake?
Well, in New York, and I'm glad you brought up New York, because New York and California are both seen as key to Democrats' hopes of taking the House of Representatives back. They are seeing a handful of districts that Joe Biden won in 2020, but the party lost in 2022. And what they're hoping they can do is, and they have certainly targeted and blanketed these locales with advertising and big pushes to try to win back those seats. One of them is in the New York City metropolitan area. Mike Lawler is defending a strong challenge from former Congressman Mondaire Jones. So we'll see how that shakes out. And that is the Democrats' best hopes of winning enough seats that they can take back the chamber. And they only need 4. They only need a pickup of 4 seats altogether to pull that off.
Mike, we thank you so very much. That is Bloomberg's Mike Shepard. Of course, fascinating. Watching even down to the House, some swing states and non-swing states, actually very contested votes there. And don't forget, tonight on Bloomberg, Joe, Matthew, Kaylee Lyons have a 2-hour Balance of Power special to kick off election night coverage, followed by Bloomberg's Election 2024 special beginning at 7 p.m. in New York. And Matt, happy birthday to you. Enjoy tonight. This is Bloomberg.